Hello and welcome back to Bold TV. I'm your host, Philip Michael, and today we're talking about one of my favorite topics, investing. Joining me is Mark Matson. What's up, Mark?
Hey, doing great. How are you doing, Philip?
I'm doing pretty good. You know, it's 2021 and new beginnings, new life. Everything is great. Now, I want to jump right into it. Do you think investors should approach the market differently in 2021 than they did last year? Or is it par for the course, business as usual? What are your thoughts?
Well, that's a great question. Investors always tend to view the market in a format of speculating and gambling, actually. Especially right now, it's intense. You have these big, massive tech companies. You have large S&P 500 growth type companies that have done really well in the pandemic. And you see many people herding up. Herding is great for zebras, bad for investors, because everybody chases the same thing at the same time. Right. And that's how bubbles actually occur and people lose a lot of money. So I would encourage investors to be much more disciplined and much better diversified and not chase all the big tech stocks. For those millennials that don't perhaps remember, in 2000, tech stocks lost over 75% of their value overnight. And the market is not immune from that kind of thing going forward.
Now, when you say tech stocks, and it's easy to get the things conflated, because you can talk about tech and speak of Slack, a new company that hit the exchanges in recent times. When you're talking about tech, are you talking about new IPOs, or are you talking about the Facebook, the FANGs, the Facebook, Amazon, and so on and so forth? Which one are you talking about? Are you bullish on the FANGs, or are you bearish on the FANGs? Which ones are you talking about when you say tech?
Yeah, I'm talking about basically any stock that would show up in the NASDAQ.
Okay.
And or any big, huge tech stock that would show up even in the S&P 500. IPOs in general are even more volatile, even more risky than the NASDAQ or the S&P 500 tech stocks. They have a massive volatility, and on average, IPOs have a negative rate of return of about 19% 1 year after they've come out. So millennials would be wise to avoid dumping all their money in tech stocks. They would also be wise to avoid IPOs if they want to have a prudent long-term portfolio for them to reach their life dreams. I think the big thing with millennials is that it's very tempting to speculate and gamble, especially with so many apps that have gamified investing. There's some things in life that shouldn't be a game. Right. Investing in individual securities and then getting a big win, and you see little confetti come down from the screen. And it's just it's seductive. It's gambling, and millennials should stay away from that.
You believe so? You don't believe millennials should actually jump into, say, a Robinhood or the Stash to get in? Because there are numbers out there that show that as many as I've seen anywhere from 50 to 80% of millennials don't invest or haven't invested at some point in time. And this is allowing, if you see the growth of Robinhood coming up to 13 million plus users, now getting ready to IPO, what do you think millennials should stay out of altogether, or how do you think they should invest?
Yeah, I think they should stay. Yeah, I think they should stay out of that altogether. It'd be like an alcoholic going into a bar on the weekends. It's very destructive. Instead, millennials should focus on a couple things. One is diversification. So a simple S&P 500 fund, maybe combined with an international type of an index fund, and then dollar cost averaging. That means the same amount every month, even if you're starting off with $100, $200 a month. Then as the market goes up, it's ups and it's downs. You'll be buying more shares when the market's down, a little less when it's up. And you have plenty of time to allow equities to work. You don't really need a lot of fixed income. You don't need a lot of quote unquote safe or income type investing. You need equities for the long run and eliminating the speculating and gambling. For those of you that are watching the media, the gentleman, those poor millennial guy that died, who got a negative rate of return. He lost $700,000 on Robinhood, and he actually he killed himself. So yeah, this is. I know it sounds extreme, but it's actually a life or death situation. You should never gamble with your future and your hard-earned money.
Right. I'm of the position that everything you're saying, I totally agree with. I do think that people should get invested in the market, and there's a way. Actually, what I do on my Instagram page, I say to people, one of the best recommendations I can make is just go in an index fund or an S&P 500 ETF and look at how they've been performing over time. And one of the things Warren Buffett says is, as long as you have the the benefit of time, it will naturally compound as your life goes on. Where do you think, if you don't think they should get into it in the apps, or even if they should, like drink responsibly, invest responsibly, how do you think they should get into this? How should they get into it? If it's not through Robinhood, where do they start investing without succumbing to the addiction?
Yeah, that's great. Yeah, there are a lot of apps that are much less oriented towards speculating and gambling. However, I think most apps do at some level promote that. So whether it was like Charles Schwab or TD Ameritrade, some of these apps are much less inclined to have you do that. Of course, if you work and you have a 401k, you should definitely maximize that first and look for options inside the 401k that are either ETFs or index funds that will eliminate active management, because that's just another level of fees that will not pay off for you long term. And you and I had just discussed it briefly. And I think millennials also are somewhat seducted, as are a lot of investors, to invest in Bitcoin. I think that's a very dangerous mistake for investors.
That actually was going to be my next segue into the next question before we wrap up. Bitcoin's been all the rage. There's a lot of hype. You see the CEO of Twitter, I think in his bio, it just says Bitcoin. I've seen some very reputable, smart people. And my personal thesis, like, I like to stick to common sense. And they're saying, here's a cryptocurrency, yet I don't see anybody using it to buy ice cream or to buy milk. I don't see that. Then I see the intrinsic volatility, and all I see is massive amounts of risk. And also, before Wall Street decides to adopt it, you're not going to disrupt the sun. You're not going to create a new sun. You can only revolve around the sun. But then I saw that it could be a potential hedge against inflation. Obviously, with all the new money being pumped into the economy, forgivable loans, there's something to be said for that. What are your thoughts on that? Will it be a hedge against inflation? What are your thoughts?
Yeah, it's a terrible hedge against inflation.
Is it?
Inflation on average grows very slowly. It has a low volatility, and you don't try to hedge something that has low volatility with something that has massive volatility. And as you pointed out, it's a type of currency. The expected return on currency is zero, but it's a very bad form of currency because, as you said, if you want to go to Lululemon's and buy some sweatpants or a new outfit, you can't pay with it for Bitcoin. So it's got all the trappings of the tulip bulb crash going back, tens of hundreds of years ago in the 1700s, where people lost massive amounts of their wealth betting and gambling on something that was really worthless. So whether it's whether it's Bitcoin or whether it's tulip bulbs, potential for massive loss of assets, stress and anxiety. So stay away from that stuff, guys.
Straight to the point. Not bullish on Bitcoin. In fact, you would recommend people to stay away from it. What is your outlook for 2021? What are you bullish on outside of course, the basics, the trusted stuff? What's your outlook, and what are you bullish on for 2021?
Well, what I'm bullish on for 2021 is America. I think this is one of the greatest countries that's ever existed on the face of the earth. I think there's been a lot of divisiveness and a lot of chaos, and both political and economic. I'm betting on America this year to right itself. I'm betting for more unity. I'm pushing for seeing the pandemic start to fade away as vaccines and a natural herd immunity take off. And I'd like to see this country look for what we have in common as Americans and not what divides us. So I'm bullish on America and the American dream this year.
And as that happens, of course, unity happens. I think it will unite. The flow of money and the economy should rise as a result, no?
Amen, brother.
All right. Mark, thank you so much for the insights. This was straight fire. Thank you so much. Thank you for being here.
Thanks,
and thank you all for watching. Yes, you got it, man. Thank you all for watching. Follow Bold TV on Facebook, Twitter, Instagram, TikTok, and YouTube. Have a great day, and I'm out of here.